Are you ready to buy? Hello everyone, Alex here. Today we're tackling a big, crucial question for all you first-time home buyers in Canada. How do you really know if you're ready to buy? As you know from my previous video, step number 1 in the home buying process is getting that mortgage pre-approval. But to get your pre-approval, you need to prove that you're ready to buy a home. Today we'll figure that out by diving into the Canadian mortgage stress test, and I'll use an example and explain it very well. So to answer the question, am I ready to buy? We need to first ask, how much will buying a house cost on a monthly basis? And what am I comfortable taking on? Okay, let's break it down. First up, the stress test. In Canada, this test is designed to ensure that you can handle your mortgage even if interest rates go up. It's a formula that the banks and lenders are federally mandated to use when qualifying home buyers for a mortgage. Now the formula is pretty simple. Its inputs are your income, the amount of money you actually want to borrow, the interest rate on your mortgage, the Bank of Canada's benchmark rate, your amortization period, and your current debt. The results of the formula are then checked against the test and the limits that the feds impose. Those limits are the GDS and TDS ratios, gross debt service ratio and total debt service ratio. All of these calculations and the results determine whether or not you as the buyer can handle the debt according to the government, and ultimately helps you answer that question if you're ready to buy a home. Okay, this is getting a little annoying and complicated and dry and boring, but to me, the easiest way to familiarize yourself with this is using the Government of Canada's mortgage qualifying tool. Link is in the description. You basically just input your personal information into the stress test. I want you to leave the default values for heating and property tax, just leave them there, they're fine. Then enter your info, so your income, your down payment. For interest rate, just put something in the low 4s for now. Amortization period, 25-year or 30-year, see what the results are. So you're gonna tinker around and play with this to see what comes out for you. And inevitably, you'll be calling a mortgage broker or banker anyways to help you apply with your mortgage anyhow, and they will be inputting this information as well. And they will be able to give you results in seconds, even over the phone. So there you have it, the stress test. You can also bump up your budget, changing the amount of money you borrowed, and see when you reach a point where you cannot pass the test. That effectively is giving you your price ceiling or your max budget for your home purchase. Now you're probably wondering, what about my credit score and where does that come in? So your credit score will help determine what rate you actually qualify for the mortgage. The better the score, the better the rate, which leads to a lower monthly payment and higher potential purchase price. I'll be talking about how to shop for mortgages in another video, so please subscribe because that video is gonna be awesome as well. So you passed the stress test, hooray! Things are in motion, but we're not done yet. We need to calculate how much the home will actually cost you on a monthly basis in its entirety, and make a very educated personal finance decision on what you're cool with. We're not calculating the cost of closing, that's in a separate video as well. We're now calculating the monthly all-in expense for the home purchase itself. So to do this, we will need the following. We will need all of the utilities and bills. So like the water sewer bill, the electrical bill, gas bill, property taxes, home insurance. And if it's a condo, we're adding condo fees too. These bills will vary, but let's get into it with just an example. For the calculations, I'll be using a free tool I built for you guys, and it's in the video description. Please help yourself to the download. So in this example, I'm gonna do a $600,000 purchase. We're gonna put water at $100, gas at $100, electric bills at $100. We're also going to put home insurance at $150. Keep in mind, this is all monthly. And then for property taxes, we're gonna put $300. Your case and results will be different. You know, ask your agent, ask your parents, compare to your current bills that you're paying and make an educated guess. So we have the bills totaling $750 a month and a mortgage payment of $2,282 a month. Combined, this is almost exactly $3,000 per month. So this is before food, internet, and all the other stuff that you personally spending all your money on. This is just the home and everything it entails. And now is about a good time to go home and have an argument with your spouse about money. On that note, I'm not a psychologist, but open communication is key when it comes to budgeting for a property. And if you haven't already, now is a very good time to make a budgeting spreadsheet. Using the tools I've linked, I like to get my clients to a point where they know exactly how much their monthly and down payment requirements change as they increase the budget. So we dumb it down to a point where we can say, for every additional $100,000 on our purchase, our total monthlies will increase by, say, $600 a month and we'll need an extra $10,000 towards our down payment. This is so key, and it's just personal experience talking here. Knowing that $100,000 impact statement helps make an informed decision on budgetary dilemmas. So we went over the stress test and we calculated your monthlies. Say you pass the stress test and the monthlies are totally cool. Sometimes what happens at this point is you realize that for this very realistic purchase now, your down payment requirements aren't so realistic. So you can either just sit around and save more money, or you might want to get some parental help. And I bring it up because a huge reality in real estate market is the privilege of having a family support. I would say much more than 50% of my first-time home buyers are getting some kind of help from their parents. Parents can help in two major ways, either by co-purchasing or by gifting down payment cash or lending down payment cash. So what do I mean by co-purchasing? Well, in my experience, there's no co-signing in purchases. When a parent becomes a co-purchaser, the parent will actually be added as a buyer, or in this case, a co-owner. So they're jointly responsible for the mortgage, and they're an owner as much as you are, and they're on the deed. The other way family can help is by gifting cash or lending cash for that down payment. Pretty self-explanatory, of course, but let's be real, with the current market conditions, this is one of the major factors that let the young generations come in and actually buy homes these days. And pro tip here is to get that gift or loan on paper. A family loan or gift is usually private, and it's totally good practice and family finance etiquette to formally acknowledge any large value transfer with anyone, let alone your family. So get it on paper, because you never know. All right, you passed the stress test, you're comfortable with the monthly costs of owning, and you know exactly where your down payment's coming from. When asked, are you ready to buy? Yes, I'm ready. What do you do next? How do you get a mortgage? Who do you contact? What's a pre-approval? How do I get the best interest rate? And how do I know I'm not getting screwed by the man when I get my mortgage? And this is all coming up in my next video, where I answer all these questions and share my pro tips on shopping for a mortgage. By the way, about that parental help, if you don't have it, watch my other video about how the Canadian government can help, kind of. And there's a few good government programs out there. Now, I hope you found these tips helpful. Drop your questions in the comments below, and don't forget that I also offer free personalized advice. So just hit me up on Instagram or Facebook. My contacts are in the channel's description. Don't forget to subscribe for more insider advice on making home ownership a reality, and I'll see you in the next one.